Did you know that a company can announce a $1 billion initiative and still watch its own stock price collapse? It sounds impossible. It sounds like the kind of thing that shouldn't happen in a rational market. And yet, that is exactly the bizarre reality unfolding right now with Datavault AI. There is a hidden reason this stock keeps falling despite billion-dollar headlines. And by the end of this video, you're going to understand exactly what Wall Street sees that most retail investors are completely missing. Right now, this stock is trading at just 36 cents. Let that sink in. This is a brutal collapse from its 52-week high of $4.03. On the surface, this looks like a textbook penny stock disaster, the kind of chart that makes seasoned investors run for the exits. But if we scratch just beneath the surface, we uncover a paradox so strange that it has retail investors more fiercely divided than almost any stock on the market today. Before we dive into the deep end, if you find this breakdown valuable, do me a quick favor and hit that like button and subscribe. It genuinely helps the channel bring you more deep dives like this one. Now let's get into it. So what exactly is going on with Datavault? There is a massive disconnect happening in real time. On one side, you have the corporate narrative, and it is loud. We're talking about massive public relations campaigns, glossy announcements, and bold claims about a $1 billion Project Qestrel tokenization initiative. If you only read the press releases, you would think this company was about to change the world. But then you glance over at the actual price action, and it tells a completely different story. Instead of rocketing toward the moon, the stock is suffering from severe, grinding price suppression, consolidating tightly right beneath the 40-cent mark. Retail investors are caught in a dangerous game of buy the rumor, sell the news, all while serious legal threats loom quietly in the background. So how can a billion-dollar announcement produce a falling stock? To understand why the market is punishing this company despite the enormous headlines, we have to look directly at the one place that never lies, the balance sheet. When we dig into the fundamental health of Datavault, the reality of the situation becomes glaringly obvious. The company carries a market capitalization sitting somewhere between $312 and $331 million. Its trailing 12-month revenue comes in at almost $42 million. On paper, that sounds like a real business. But here is the massive red flag that changes the entire picture. Their EBITDA is a staggering negative $42 million. Read that again. They are burning through cash at an absolutely phenomenal rate. This is reflected in their negative price-to-earnings ratio and a recent earnings miss where they posted earnings per share of negative 9 cents. Now, does this mean the company is going bankrupt tomorrow? Not exactly. Their current ratio sits at 4.58, which shows they actually have strong short-term liquidity to keep the lights on for now. But could a company survive forever while bleeding $42 million? That's the question that keeps investors awake at night. And while these liquidity numbers look decent on the surface, there is one hidden metric coming up later that changes absolutely everything about how this stock trades. Keep that in the back of your mind because we're going to circle back to it. But first, let's examine the desperate public relations machine driving all of this recent hype. The month of July 2026 has been an absolute whirlwind of corporate catalysts for DVLT. On July 1st, the company announced a proposed $700 million Patriot Strategic Metals joint venture, with $62 million directly allocated to Datavault. Then, in the middle of the month, they completely overhauled their leadership team. And then, on July 17th, came the big one, the announcement that everyone was waiting for, a $1 billion tokenization initiative for their edge AI computing access. So with all that firepower, all those enormous numbers, what did the market actually do? Did it explode upward? Did investors pile in? No. The stock dropped 5.62% almost immediately. Think about how remarkable that is. A billion-dollar announcement, and the market responded by selling. The market was essentially screaming, in the clearest language it knows, that it simply does not trust these numbers. And when a market refuses to believe a billion-dollar story, you have to ask yourself, what does it know that we don't? The company clearly understands it has a serious trust problem, and that is exactly why they made their next move. To fight back against the wall of skepticism, Datavault initiated a massive governance pivot, a deliberate effort to project financial and technical legitimacy. They appointed CBI ZCPAs as their independent registered public accounting firm, a move designed to signal strict audit compliance to a doubtful market. They also brought in Dr. Barry Child, a quantum encryption expert, as their brand new Chief Information Security Officer. In In other words, they are desperately trying to convince Wall Street that there is real adult supervision in the building. It's a classic playbook. When confidence collapses, bring in credentialed names to rebuild it. But is a fresh coat of governance paint enough to fix what's underneath? Because none of this matters if we don't confront the massive elephant sitting in the middle of the room. The real reason this stock is struggling to even breathe. This right here is the legal and reputational overhang that is quietly strangling Datavault. It all began with a devastating short report from Wolfpack Research back in October 2025. In that report, Wolfpack openly accused Datavault of being, in their words, a stock promotion built on empty claims. They alleged the company was tossing around buzzwords like Web 3.0 and artificial intelligence while showing virtually zero actual trading activity on their blockchain. And it got even darker. The report alleged ongoing corporate affiliations with a convicted felon. The consequences of this were not just talk. As of July 12, 2026, the law firm Bronstein, Gewurz & Grossman launched a formal investigation into the company. Now think about the timing here. A company announces billions in initiatives while simultaneously facing a formal legal investigation into whether its claims are even real. When you put the shiny public relations right next to the cold legal reality, the picture becomes incredibly dark, doesn't it? If we lay this all out side by side, the contrast between the narrative and the fundamental reality is nothing short of brutal. They claim a $1 billion tokenization. The reality is an immediate 5% stock drop. They claim a $62 million allocation. The reality is a company operating at a $42 million loss. They pitch a full-blown artificial intelligence revolution. The reality is a federal-level investigation into empty claims. Every single promise seems to have a shadow standing directly behind it. So the natural question becomes, who exactly is holding the bag on this wildly volatile asset? The ownership breakdown reveals yet another massive disconnect. Insiders retain a controlling stake of 37.45%, a position that remains heavily opaque and difficult to see into. Meanwhile, institutional ownership, the so-called smart money, is sitting at a microscopic 4.43%. The giant players like Vanguard and BlackRock hold only tiny, almost token positions. And what does that leave? It leaves a massive 58% public float sitting entirely in the hands of retail investors. Everyday traders, people like you and me. And here's the thing about penny stocks. When retail investors completely control the float, the trading mechanics become entirely unhinged. This brings us to the retail sentiment and volatility mechanics. And honestly, this is where the story gets almost surreal. If you check platforms like StockTwits or Moomoo, you'll find purely polarized meme stock behavior. One minute, traders are hyping up a Diwali on the boat celebration, riding waves of pure optimism. The very next minute, there is daily bearish panic, with people screaming that the whole thing is a total fraud. With a beta of 2.55, this stock is wildly, almost dangerously volatile. What does that mean in practical terms? It means standard options contracts on this stock are incredibly expensive because the implied volatility is so high that it effectively prices ordinary retail traders right out of the game. But that same extreme volatility is exactly what sets the stage for our next critical data point. And this is where that hidden metric I promised you finally comes into play. We are looking at what can only be described as a highly pressurized short squeeze engine. As of late June 2026, over 96 million shares of this company have been sold short. 96 million. That represents 12.24% of the entire float. Now, short interest did decrease slightly by about 7% recently, but make no mistake, the tank remains highly pressurized. Yet even the total number of shorted shares isn't the most explosive part of this entire equation. The real danger, or depending on your perspective, the real opportunity, lies in a metric called days to cover. This number currently sits at 5.5. Here's what that actually means. If every single short seller decided they wanted to exit their position today, all at once, it would require over 5 full days of average trading volume for them to do so. 5 days. In a sudden panic event, this kind of volume bottleneck can create explosive upward pressure because there simply aren't enough shares available for everyone to buy back at once. Could this be the setup for a violent, sudden price spike? History says these conditions have produced exactly that in other stocks. So considering all of this, what is Wall Street actually telling you this stock is worth? Here's where things get almost comical. There is one analyst out there assigning Datavault a strong buy rating with a price target of $3. $3 from 36 cents. Let me be entirely clear about what that represents. That is a 718% projected gain. Does that sound realistic to you? Given the pending fraud investigations, given the $42 million earnings deficit, a target like that has to be viewed with extreme skepticism. It's the kind of number that sounds thrilling until you remember everything we've just discussed. Which brings us to the ultimate fundamental verdict. When we synthesize everything, the serious legal risks, the broken fundamentals completely disconnected from reality, and the pure penny stock volatility, a clear picture emerges. Based on the available evidence, Datavault AI presents extraordinary risk as a long-term hold. This is simply not a set it and forget it, build your retirement around it kind of stock. The fundamentals and the legal cloud make that abundantly clear. However, and this is important, that doesn't necessarily mean the story is over forever. Could this company ever turn things around? For this to become a legitimate long-term hold in the future, the market would need to see a genuine transformation built on two key pillars. First, there would need to be an absolute resolution of the Bronstein investigation and a complete clearance of all fraud allegations. The legal cloud has to lift entirely. Second, and just as critically, there would need to be proof of actual revenue realization. Those billion-dollar tokens and those Patriot allocations would have to translate into hard, real GAAP audited revenue, verified by their new accounting firm. Promises would have to become deposits. Until both of those things happen, the skepticism is more than justified. Now, before we wrap up, I need to share something important with you. Everything discussed in this video is for educational and informational purposes only. It is not financial advice, and I am not a licensed financial advisor. The information here reflects publicly available data in my own analysis, which could contain errors or become outdated. Stocks, and especially volatile penny stocks like this one, carry significant risk, and you could lose some or all of your investment. Please do your own research and consult with a qualified licensed financial professional before making any investment decision. Never invest money you cannot afford to lose. With that said, let's bring this all together. Datavault AI is one of the most fascinating paradoxes in the market right now. A company shouting billion-dollar promises into a market that keeps quietly walking away. Between the loud public relations, the broken balance sheet, the looming legal investigation, and that pressurized short squeeze setup, there is genuinely something here for everyone to watch, whether you're a skeptic or a believer. So now I want to hear from you. Here's my question. If a company kept announcing billion-dollar initiatives, but the market kept selling every single time, would you ever trust the story enough to take a closer look? Or is a falling price the market's final answer? Drop your honest take in the comments below because I read them, and I love seeing how differently people interpret the exact same data. If you made it this far, you're my kind of viewer, so smash that like button, hit subscribe, and turn on notifications so you never miss the next breakdown. Until next time, trade smart, stay curious, and protect your capital.